Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
Hello and welcome to a brand new episode of the Chase Buchanan podcast, Expat Money Matters. I'm your host, Georgina Eldridge, and today we are setting our sights on one of the most popular destinations for expats, Spain. With its beautiful climate and relaxed lifestyle, it's a dream for many, but the tax landscape can be incredibly complex. Joining me today to help navigate the financial realities of moving to Spain is Chase Buchanan's very own Steve Langford. Steve, welcome to the show. Let's get straight into the details. Can you tell us about solidarity and regional wealth tax?
Let's talk about wealth tax for a moment. First of all, Spain consists of 17 autonomous regions and 2 autonomous cities, and the wealth tax, like the general income tax, is very similar. It's different between each of the regions. So imagine the counties in the UK all having different tax implications. It can be quite interesting. Now, wealth tax, generally, most regions have an allowance of 700,000 euros. Wealth tax is basically a tax on your worldwide wealth. So everybody has an allowance of around 700,000 euros. I say around then because some regions are 500,000 and some don't have it. But generally speaking, it's 700,000 euros per person. Plus, if they're resident in Spain, it's a further 300,000 euros allowance. That's per person. One of the autonomous regions in 2022 decided to give wealth tax a 0 rating. So they weren't going to charge it. They decided that actually it was 0.4% of their revenue was generated from wealth tax, and they thought it would encourage wealthier people to move to their region. So 2 weeks in, the central government decided to launch a new wealth tax. They called it solidarity tax. And some suggest that this may have been a reaction to this autonomous region getting rid of the wealth tax or giving it a 0 rating. So the new wealth tax or solidarity tax is then taxed centrally from central government. There is an allowance, first and foremost, of 3 million euros per person, plus then a further 700,000 in additional assets, and then you have 300,000 per person in principal private residence, assuming they're resident in Spain. Now, what is very important is if you're a very wealthy person, is that you equalise your assets, if that's appropriate, before moving to Spain, so that you don't fall foul of any gift taxes.
That's a very important distinction regarding asset equalisation. Now, aside from wealth tax, there is often confusion regarding assets that are kept back in the UK or elsewhere. Is there a specific requirement for reporting those?
The Modelo 720 is basically a declaration that you need to make in Spain for assets outside of Spain, more than 50,000 euros in any one of 3 asset categories. The first one is property, the second one is cash, and the third one is shares. And there are obviously the subheadings underneath that. So property, for example, would be commercial property, land, buildings. Shares would be sort of open-ended investment companies, general investment schemes, and then cash would include things such as national savings accounts and cash ISAs. Now, if there's more than 50,000 euros in any one of those asset classes, you've got to declare this to Spain at the end of your first year of residency. So it's due 31st of December, and you have to the end of the first trimester to declare these assets. And what the Spanish want to know are the purchase prices of each of these assets, which is fine. There is no further tax, there is no further liability on it, and there's no necessity to declare again unless the asset has increased in value by more than 20,000 euros or you change the asset to another class. So, for example, if you had a property that you declared and it happened to be in the UK and it was £100,000 purchase price, and then you sell that, you may have 200,000 euros in a Spanish bank account. you have to then tell them that you've sold that property, which would obviously then generate a capital gains tax enquiry and the necessity to declare this gain.
It definitely sounds like professional advice is needed there to avoid those capital gains traps. Moving on to day-to-day finances, how does the Spanish system differentiate between a salary or pension versus the interest one might make on investments?
There are two types of income taxes. The first one is general income tax, which is tax on earned income or pension income, and is regionally specific. So if you recall from earlier, the 17 autonomous regions and the 2 autonomous cities generally have a different level of income tax. Some have 5 bands, some have 7 bands. So that's important to get advice upon that. The second type of income tax is capital gains tax or savings income, which is liable for things like capital gain. And that's taxed, and the rates are all centrally taxed. So rates ranging from 19% right through to 28% in Spain nationally.
So the tax structure is quite clearly defined. Let's shift gears slightly from the technical tax details to the actual move itself. When clients come to you and they're looking to buy a home, what factors do you suggest they prioritise?
From a tax perspective and a property perspective, I think it's really important to first and foremost decide where you want to live, where it's going to make you happy. For example, some people don't want to see another person from week to week. They like the tranquil lifestyle. They don't want to see anybody else. Other people, that might really upset them and get bored. You've got to also consider that down near some of the coastal towns, they become inundated with tourists during the summer months and go quite quiet in the winter months. So a decision is important as to where you want to live. Quite a few people actually take a rental of a property first and foremost in order to get a feel for the area, a taste for the area. Do they like it in the winter months, or do they like it in the summer months? They might like a lot of activity. As far as purchasing a property is concerned, generally speaking, one should make a contingency for around a further 10% of the purchase price. This would be for taxes and legal disbursements.
That is great practical advice. Try before you buy. Finally, Steve, for those who are ready to make the leap, what are the critical planning steps and the timelines they need to be aware of before they actually arrive?
There are some key things you need to consider. First of all, and probably the most important, is getting the timing right and looking at your assets from a UK perspective and how they're going to work in Spain going forward. You must understand the residency rules. The 183 days resident in Spain goes back to January the 1st. So if one was to move in, say, March, you're going to be classed as tax resident in Spain from January the 1st. So it's really important that your assets are constructed in the correct manner for Spanish tax efficiency. Also consider your relationship with your current financial advisors. Generally speaking, most companies do not have permissions now since Brexit to advise people moving to Europe.
Steve, thank you so much for sharing that expertise. It's clear that timing and professional guidance are absolutely essential for a smooth transition. And to our listeners, if you have more questions about moving to Spain or need personalised advice on your financial situation, please don't leave it to chance. You can find more information and Steve's direct contact details by visiting our website at chasebuchanan.com. I'm Georgina, this has been Expat Money Matters, and we'll catch you on the next episode.